Good morning, traders. It's the 14th of March. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, very good, mate. Cheers. Thank you. How are you?
Yeah, not too bad at all. Thanks very much. Okay, so plenty more headlines to get through today and lots of market movements to dissect, which we will do very shortly. If there are any requests this morning, if there's any markets that you're looking at and like an opinion on, please feel free to post them up. It's going to be quite a busy day because we've got the US CPI number out a little bit later, which promises plenty of volatility. But ahead of that, let's get on to the headlines of what's been moving markets over the past 24 hours. So the financial sector continues to dominate in the market space. The US moved to protect all deposits at the Silicon Valley Bank, and potential risks of contagion in the financial sector continued to dominate during Monday's session. Conditions were slightly calmer this morning, although there is still notable nervousness within the equity markets. There's been a further shift in the Fed expectations. The unease over the US financial sector triggered a further shift in expectations surrounding the Fed policy. From the March policy meeting, markets moved to price out completely the possibility of a 50 basis point hike. That looked pretty much nailed on at the start of last week. But indeed, markets signalled close now to a 30% chance that there would be no increase in rates from 4.75%, and at least one bank forecast that there would be a rate cut. So now the expectations are that that's changed completely. We're not expecting to see any rate cut at the March meeting. There's also been a dip in the ECB expectations with a shift there, and markets now considering that the most likely outcome is that there'll be a 25 basis point rate hike, compared with a 100% expectation of a 50 basis point rate hike last week. So US inflation expectations have also declined. The New York Federal Reserve 1-year inflation expectation has dipped to 4.2% from 5.5% previously, which is the lowest reading that we've seen since May 2021. The 5-year index increased marginally to 2.6% from 2.5% over the weekend. And the US Treasury and Federal Reserve announced that all deposits in the Silicon Valley Bank would be protected, and the move triggered a strong rebound in risk appetite with a recovery in equities. The US yield slid further yesterday. The US 2-year slumped to hit 4% for the first time in close to 6 months, compared with 5% last week, and the 2-year yield traded just below 4% on Tuesday. The dollar continues to lose ground as a result of all of this and the shift in Fed expectations and a rebound in risk appetite. This morning, UK wages moderated slightly. The UK labour market recorded an unchanged unemployment rate of 3.7%. And the headline increase in average earnings slowed to 5.7% from 6%. And again, all important US inflation data today. The US consumer prices will be released on Tuesday. The consensus are for a 0.4% increase in prices for the month, with the year-on-year inflation rate declining to 6% from 6.4%. So 6% is the number we should be watching out for later on today. The Fed will find it easier to justify backing away from a March rate hike if the data is in line or weaker than expected, while stronger data would cause major tensions. If we continue to see inflation rise, then it may force the Fed's hand to actually change rates as expected. But yeah, it's going to be a pretty choppy one, that's for sure. So that's it for the latest headlines. Let's get stuck into some markets. So a few requests coming in already on the FX side of things. Steve's going to kick us off with cryptocurrency.
Thanks, Joe. I'll just share my screen. I don't know. I feel really angry this morning.
Angry?
Yeah, I just feel angry, mate. Just feel
Oh.
angry. It's just a debacle. You know, just a debacle. Just like the more you read about Silicon Valley Bank and, you know, what's gone on, it just sort of makes me so angry. Like, how can the regulator let banks do what they've done? Especially, you know, 2008 is like burnt into our, it should have been burnt into our memories, but obviously people have got short memories. Anyway, we'll get into that. I'm sure I'll have plenty of time to get on my soapbox and shout at the people in charge. Let's start with Bitcoin, another overinflated asset. Anyway, yeah, as we've seen over the last 3 days, this has had a rally on the back of all the bad news that's going on in the banking world. Quite bizarre. Obviously, the cryptocurrency, for whatever reason, is going to benefit because the actual monetary system that we all know and love is going to be sort of like reduced to rubble, and we're going to have to take all these cryptocurrencies. That's what the story is anyway. I wouldn't be surprised. Bank of England talking about their central bank digital currency that we're going to have to adopt, and we can only have a certain amount, and they're going to program it and all that rubbish. Anyway, let's just like stick all the cash under the sort of mattress, Joe. I think that's what we should do for the gun to head. See if we get a better return on it. So anyway, let's 25,400 is the level of resistance that I've been calling for a long time now. Price action is getting close. Just stalled in front of the 25,000 level, 24,917 on this chart after a 3-day rally. It's stalled and reversed quite sharply. We've dropped off a little bit, and that's forming a little bit of a shooting star candle. So be careful with this one. Yeah, but at the moment on the short-term charts, looking pretty tasty. It's above the Ichimoku cloud. However, after a 5-wave impulsive move higher, we're looking for an ABC correction. Looks like this could be the B, but if it potentially takes out the that top of the 5th wave, then we are in trouble, and it's not a B leg. Same sort of price action in Ethereum. We're getting close to that 1730 level. So for a contrarian trader, which I love to be, this is a great time to sort of like start to think about fading this ridiculous rally that we've had over the last few days. And keeping the stops pretty tight. Always like think about the money management of your trade ideas when you do trade. For me, having the stops above that then resistance levels but give them a little bit of room is the sort of like one of the trades at the moment. But I don't trade cryptocurrencies, so not for me to do. Leave it to everyone else out there who's mad enough to trade it. XRP has been under pressure. That got down to 35.17 on Sunday. It's reacted higher. We're back up to just stalled around 38 level. Look at the daily chart. We can see that the downward trending resistance line is still holding, still doing a bit of a job here. But it is like the champagne bottle is being shook up and the cork's going to pop. But is the bottle going to be facing up or down? We have to see. At the moment, it's not really reacting as Bitcoin and Ethereum are and other digital assets. But yeah, there's a bigger story going on here with XRP and the SEC lawsuit. Looking at commodities, gold. Always believe in your soul, is it? Can't remember, but anyway, we sort of like I called this a gun to head trade yesterday, well, last couple of days, and it's worked out pretty nicely. Nice reaction higher, and that's continued. We got through the resistance. We got up to 1915 yesterday. Haven't taken that out yet today, but we're still hanging about these heady heights. 1910 trading, still got good potential on the upside. And yeah, it's playing out really nicely from a technical perspective. No real signs of gold slowing down. We're above the is this the daily chart? Is the daily chart? We're above the daily Ichimoku cloud, so that's looking pretty good. And just broken above there. Gold, safe haven asset, obviously. That's the place where everyone rushes to when we get a little bit of uncertainty in the financial world, which we're seeing at the moment. Looking at the sort of like shorter term levels, let's take a look. On the 4-hour chart, we've basically we had a double bottom formation that I called yesterday. Give the measured move target of 1911 or 1912 actually, and that's where it stalled. So quite nice. On an Ichimoku cloud perspective, it looks like we're in the 5th and final wave higher. Potentially, we've got 2 targeted, depending on the sort of like Fibonacci extension level they get to. We've got 1975, which is a key resistance. I'm sure that's like was a level from way back a while ago. Can't remember when. And I know 1966 was a level because we talked about it a lot on the Talking Bull show. But the major one that I'm looking at is the 161.8 extension, which is up at the all-time highs. Now, if really the things turn to crap on the indices front, there's good potential here for that to have a serious rally. However, if the move lower and indices is extended, remember what happened last time? We had a big, massive market sell-off. Gold followed. and it took a few days for gold to sort of like wake up and realize it is a safe haven asset. Again, all dollar based, so dollar sort of like seems a little bit stronger than it has been, so let's put a little bit of a cap on gold maybe, but you've got a battle between the safe haven interest in gold and the dollar relationship. So that's good. That's good. Being a bit backwards and forwards at the moment. So watch out for that one. But yeah, resistance on the upside for me, probably around about the 1960 level. And above that, we've got other resistance we talked about, 2000 psychological and 2075, the all-time high. Silver's a bit delayed in this reaction, like normal. It's a bit of a slow burner, a little bit trying to catch up. $22 is the resistance we're seeing at the moment, but it's been a nice extension higher in a similar way to gold, but just a little bit slower, as I say. Plenty of room on the upside for this bad boy as well if we get this safe haven continue. Taking a look at crude oil, under a bit of pressure. And crude oil for me seems to be one of the assets that's really, in times of uncertainty, it's one of those things that's not like money or stocks or ETFs or CFD. You can't keep printing oil. It's actually a physical asset. So there's a lot more to it than we give it credit for. At the moment, though, it's under pressure, and we broke through this upward trending support yesterday. We're down below it again today. So that was a potential trend line, nearly 3 points touched. It broke through that point yesterday, but it stalled at 72.58, which we've had highlighted on this chart. Well, we would have had it highlighted on the chart since the 5th of Jan. Did a job on the 6th of Feb, but the 13th of March, it's done the same thing. So acted really nicely as support, and maybe we're back into this range. So although we're on the back foot this morning, look out for them buyers coming in and getting value around this level at 72.60. Below that, we've got 70.21, which is a much more major support level. And above, we've got the Ichimoku cloud coming in around about the $77 level. The major resistances, though, are way off at 80.80 and 82.61. Brent crude trading at a $5.70 premium to WTI crude oil. That took out the support that we had at $79, actually made its way down towards the 77.60, stalling at 78.01 before reacting higher. So again, on the back foot this morning, it looks like it could, it's threatening to maybe test even that 77.60 level on Brent crude oil. And natural gas has had a little bit of a jump up yesterday. Bullish outside candle, looks very positive, potentially a little room on the upside. Posted higher low. So are we seeing this really sort of like awkward looking inverse head and shoulders taking shape now? Looks like that 245 level is going to do a bit of a job here. So watch out for that. On the downside, that'll be the support resistance up at 305. Not very far away, really. So let's take a look at the FX market. So there's a few requests out there, Joe, and then we could dive into the indices. I see someone wants to look at FTSE 250. I'll get that.
So to get the code on that, I think you type in CBOE, Stephen, it'll come up with a 250 index for us to take a look at. Okay, so dollar index. I'm just going to do a quick sweep through a couple of the majors, then I'll get onto these requests. Going to take a look at CAD, Swiss, Euro CAD, Euro Oz, and Euro Sterling. But let's take a look at dollar first. So we can see here that over the last couple of sessions, there has been some sustained weakness. So as a result of the change in the Fed rates futures, indicating now that they're not going to be a rate cut, or potentially a very low percentage chance of a rate cut in March, we've seen the dollar decline quite sharply. So it was trading in this kind of corrective wedge, moving higher, got up close to that 38.2% fib level before fading, and now we've broken through this sort of short-term wedge to the downside. So it's pretty choppy stuff, because we can see a breakout of this short-term downtrend as well. We have highlighted this 103.63 level for the last few weeks as a support zone, and we can see that the price is stalled into that level yesterday and have bounced this morning up by 0.3% as things stand. So there seems to be a reasonable amount of support on offer here. Let's see what happens today. I'd expect there to be a pretty big move in the dollar today as a result of that inflation number, which is due out a little bit later on. So in terms of how this is impacting euro US dollar, we've seen a break to the upside here out of what could be a bit of a wedge formation, indicating that prices are likely to move higher. We saw a gap higher on Monday, and prices remain elevated but on the back foot today, pretty much mirroring the gains that we're seeing in the dollar index, which we're seeing in euro dollar, which is down 0.3%. So potential for this to rise higher towards 108.85. But also potential for it to pull back and fill that gap, because I'm not sure it's quite done it. So the gap would have been created on the close from Friday to the open on Monday. And we can still see there is an unfilled gap at 106.39. So I wouldn't be surprised if we get a pullback to that level, and then maybe we will see a pullback there before potential rise to the upside. Let's take a look at cable. So this threatened to complete a double top when it broke down through support at 118.42, but it's come roaring back in some style, really, breaking out through this wedge formation as well. Big gap to the upside. Again, an unfilled gap here that we need to consider. That's at 120.29, but at the moment it's on the front foot. Over the last few sessions, a bit of a pullback today, but within the body of yesterday's candle, so still potential for that to rise towards resistance at 122.93. So expecting more sideways price action ultimately on this, potentially still in the process of forming a top. In order to invalidate that, we need to see a break through these highs at 124.30. Okay, onto the request. Let's start off with CAD Swiss franc. So this is still trading in a pretty nasty downtrend, as we can see here. Plenty of kind of consolidations along the way, which eventually resulted in a breakdown. And we saw another one here. This was not so much a flag as these were, but more of a triangle pattern. And the breakout to the downside has been pretty aggressive. Is that a support level from previous? Yes, it is. So it's a previous low from back in March 2020. So we're back at those COVID lows for CAD CHF, and there has been a bit of a reaction. So if there's any swing traders out there that have been eyeing up that level, then we got a bit of a swing failure. So we did actually make a marginal new low, but we closed well above that low, and we're potentially posting a bullish engulfing candle as things stand at the moment. We're engulfing the body of yesterday's price action. Long way to go on the session, but potential here for a bit of a corrective bounce in the short term. But clearly we have to note that the overall trend is very bearish, and therefore any correction here is likely to be limited to potentially 67.74. But from a risk reward perspective, let's just try and map that out. If we were to buy at current levels, target that resistance and have a stop just below this low that we posted yesterday, the risk reward on that's about 1.67 to 1. Ideally, we'd like to see 2 to 1. But if you've got good win rates on your approach to trading, this is typically the sort of trade that you like, a big swing failure, looking at major levels on the long-term charts, then maybe that would suit your win rate, and there's some potential there. Let's take a look at Euro CAD. So this is making new highs. So this has broken through resistance that's been in place for a significant period of time. We can see here there's a couple of touches at this level back in December 2021, again in February. We can also see this low here, which if we draw a line on, pretty much lines up with those levels as well. So it was a pretty major resistance level there that we've broken through. Clearly the trend has been super positive really since August last year, and has really showed no signs of stalling. There was a period here where you could have argued that maybe a top was forming. That hasn't been the case, and euro has continued to push higher. If we look at the price action here, we can see the break through these major resistance, posted a bit of a doji yesterday, and we've seen a pullback to now test this newly formed support level. So potentially an opportunity to buy here based on that technical pullback, looking for higher prices. So in terms of where those higher prices could go to, then again, we've got to reference the left-hand side of the chart to find some major levels to potentially target. And we can see there's 3 touch points here between the period of July 2021 to September 2021, which could present us with a potential upside target. So maybe something like that if you're looking to set up a trade on Euro CAD. Risk reward on that base is about 4.3 to 1, so that's quite favorable if you can get that pullback to test that zone of support, which arguably it's already done. So if you're buying it at market, the risk reward would shorten slightly to about 2.8. But all in all, that's looking pretty positive indeed. Okay, let's take a look at Euro Oz now. So that's broken out to new highs as well on a relative basis. So the highs that we posted in December have been taken out. We then saw a nice technical pullback to retest that newly formed support of 159.78, and prices have pushed higher towards 161.70. So we're into some resistance here. We've got two black lines. If we refer to the left-hand side of the chart, we can see why. There are a couple of resistance levels here from back in September 2021 to February 2022. Above that, we've also got another level to consider up at 164.36. So although it looks pretty good and potentially formed a really large bottom, certainly completed a double bottom back here on the breakthrough resistance in October, the measured move of that double bottom comes in at 163.80. So suggesting there is a reasonable amount of upside potential here if you were buying that pullback to 159.78. Maybe it's something along these lines, targeting maybe in the middle of that resistance and that measured move target. Then you've got reasonable risk reward of 2.85. But there are some pretty stiff resistance levels here that need to be overcome in order for that trade to play out. So the other one was Euro Sterling. Is that right? Is that Ali requested that? Yes, Euro Sterling. Yeah. Okay, Euro Sterling. So these two have been pretty choppy, really. I mean, overall, the trend is more favourable for Euro over Sterling and has been for a while, but it's been pretty choppy in between. So in recent times, we can see that there is a sequence here of higher lows. But we can see that there's maybe some sort of triangle or wedge pattern forming at the moment, because we can see here there is a short-term downtrend, but prices appear to be finding support at 87.83. So we can see here on today's price action, we've made a low down to that support level, which has held. Also, the sequence of higher lows here in this short-term trend, and it seems to have found some support. So potentially a bit of upside potential there in the short term. How far will it go? Well, difficult to say. If it's going to continue to be capped by this sequence of lower highs, then maybe you'd be looking for some sort of upside to around 89.00. Of course, if it breaks out from that, then there is a fair amount of blue sky for us to move into on the upside, and we can start looking for higher prices. This was also looking quite interesting on the intradays, actually, and potentially a candidate for me on the gun to the head trade. So this is obviously a very short-term period here, going really to these swing lows from the 28th of Feb. We can see there's been a pullback in price to a 78.6% fib level at 87.91. So if this is going to find another higher low, then maybe we want to be considered buying this at the moment and potentially targeting a move towards the volume point of control in this short-term period, which is up at 88.76. So from a risk reward perspective, that's about 2 to 1 from current levels. So maybe a candidate for me to check out in a while on the gun to the head trades. Okay, going to leave it there on FX unless there's any other requests, because I can see there's 2 requests for indices today. We would be happy to look at Dow and also FTSE 250, and I'm sure the more general ones as well.
Yeah, absolutely, Joe. Let's take a look with the major ones we start with. But I'll go FTSE, then I'll go the 250, because there's a few hammers out there that need to sort of like a little bit of technical experience from me to show them the way. Let's see. Well, I mean, talking about sort of hammers fans, the bubble seems to have burst, mate. Really, that's all I can say. And FTSE is one showing that way. We hit an all-time high. It was only about, well, a month ago, 16th of Feb, we got up there, and traded up to 8,046.5. Since then, we've had a big pullback. It's a little bit of it wasn't a great head and shoulders formation, but it was similar price action. But the funny thing is, we'll look at the 250 in a minute and you'll see what I mean. But yesterday, over the last few days, like we've seen 3 huge negative days. Now, this is all basically, there's a lot of banking element to the FTSE index. So they've been taking a massive hit. This contagion effect, this domino effect, this like wave effect, tsunami of poor sort of like price action from the stock market, from the bank stocks, is evident to see. You can see these 3 huge negative days. We've taken out all the support levels that we'd built up over time, and we've actually drilled dead down now, found a support level here, and that was really, I don't know what, I mean, we could sort of like take it all the way back to this level doing a bit of a job in the past. Let's get rid of it because it's muddying the water a little bit. But we've basically, if we look at the move from October, mid-October to mid-Feb, we can see that this 5-wave impulsive move higher topped out then, and then we've stuck some Fibonacci lines, and we've actually retraced just over 38.2%. So that 7,535 was there, did a little bit of a job yesterday. However, price action breaking through there this morning. We're even looking at the psychological level around a 7,500 being taken out as we speak. Next levels of support, well, all the way down a 50% fib maybe, but the real level I'm watching is the 73.03. Now that's 200 points away. It'd need a really, really bad day for it to hit there today, but potentially that's where I think the next level of support is. I mean, we've got some at 7,400 just above there, where we've sort of like had a few days where we reacted off after finding support at 73.03. But yeah, for me down there, and overall 61.8% fib, which is just a normal correction in markets, is down at 7,218. So nothing really positive to say about FTSE. You can see the sort of exponential move that we've seen since breaking down through the 4-hour cloud, and it's just been one-way traffic, and nothing really I can see that's going to stall that bad boy. Now let's take a look at the longer term chart on the CBOE UK 250, and this is a CFD. Can't remember whose it is. It's City Indexes one. So we've had this high up near the 30,000 level, the impulsive move lower, bottomed out on Monday the 10th of October, or the week of Monday 10th of October. Nice little bottoming formation, double bottom, projected higher nicely, and we've had the reaction rally since then. But obviously we can see that we didn't really even get to 61.8% fib before topping out around about the 25,000 level and then breaking lower. But this looks really sort of clear on the daily chart what sort of formation we've had, and it's my favorite formations, as you all know if you listen to me and are bored by me over time. This head and shoulders formation, it's very, very clean. We've seen a really clean break of it. Obviously, you see a lot of gaps on the charts here because this doesn't trade out of hours. It only trades between the open market hours, between 8 o'clock and 4 o'clock, whatever the hours are. And so you'll see a lot of gaps on the chart. So yeah, head and shoulders formation, neckline formed, came in around about the 23,800 level. Over the course of Thursday and Friday, we saw that sort of like big gap open, big breakdown, and price action really extending lower yesterday. Lots of sort of like negativity creeping in, and that's been dragged down by obviously banking sector as well. So where does it stop? Where does the rot stop? Well, the measured move target for the head and shoulders formation comes in at 22,470. Now that's just a measured move target. It's not, I'm not saying there's support there. Really the support that I see is probably at the swing low from the 20th of December. That's coming in just above the 22,000 psychological level, 22,000 because it's all the round numbers that people look and get excited about, and that's also just below the 50% fib retracement, which we do get in markets quite often. There's also the extension level and the 161.8 extension level comes in at 21,683, which isn't far away from the 61.8% fib retracement. So again, as with the FTSE, I can see nothing really of any support at all to slow this one down. It's just going to be under pressure. We've had some good news coming out where the Fed, the Treasury, all standing behind the bank losses. That's good news. It's not rolling over into what's going on in the price action in the bank stocks. There's still a lot of nervousness now out there, and I expect that to continue because this, you know, there's more to play out from this story. It's not just going to go away. And although some markets are trading, you know, leaving me scratching my head and the way they're trading. But anyway, let's dive into the DAX Germany 40. and you can see the negative price actions taken out. The real big level of support we had, 15,145. We even got down to this level of resistance once, then turned into a really decent support level. The level of resistance was 29th of March, it was posted 22, and then acted as support on the well, earlier in the year, 19th 20th of June, and we're there now. It's 14,925. Now we're also running into really decent cloud support. So has it done a job? We've got the double top or triple top formation, we could call it. The measured move target for that is 14,820, which looks pretty likely. Also, I suppose if you wanted to sort of like try and see whether this more recent double top formation, let's take the high there. That measured move target comes in at the 161.8 extension lower from the other double top. Tells us that 14,584 is a measured move target. So whatever we're looking at, we've had the impulsive move higher, a nice confirmed impulsive move, end of the fifth wave. We talked about it for a while. It went sideways for a while, and now it looks like it's confirmed. And we've got the ABC correction coming. So we've hit the A leg, looking for a little bit of a bounce for the B leg before a C leg move lower. Similar sort of price action in EU 50. This is one I've sort of like, I'm short of, you know, myself, but you know, I'm just leaving it, and stops way above, well, just above the high actually. But look, that looks like it's done a good job. We found support here at 4,091, and we're also cloud support, so it has stalled here. I think I'm looking to target a move more down to this 3,800 level. And on the Fibonacci perspective, if we sort of take, oh, well, we can adjust that. We can say the impulsive move started back here, and looking really for a 50% Fibonacci, 50% retracement from this entire move, from the October move to the March highs. Look, that's the levels we're looking at on the EU 50. US 30, the Dow, what's going on in here? Again, this is it's broken through the major support levels that we had. We actually will extend this line. This is, I'll extend it right. This is a reverse trend line. If we remember the downward trending resistance line that we struggled to get through, once we got through, we retested it, bounced, and now we're retesting it again. So definitely a level to watch. Support coming in from this swing low here. This is 4th of November swing low. We broke through it yesterday, had a bit of an extension lower. Prices cut back, closed the day above that support level. So it's done its job to a certain extent, but 31,700, definitely a level to watch today. It's the reverse trend line. It's also that previous swing low and reaction level. So a break down below there, and we are in trouble. Again, let's take a look at where the fibs come in. 61.8 is down at 31,000. That's not far away at all. That I would say there would be some support around there. On the upside, really, price action needs to get back above 32,440, and it has to do it pretty soon. Otherwise, this market's in trouble as well. Nasdaq has also been impacted, not quite as heavily maybe as the banking sector indices. This is more of a tech sector, but obviously this Silicon Valley Bank is linked to a lot of tech companies. It was basically set up for them, that sort of client, them small, medium enterprises, but all their money's safe apparently, so should be all right. Price action in here got down to a level withdrawn on the charts, quite a key level, 11,687, and bounced nicely higher, so has held. Looks like we could be trying to post some sort of stalling reversal formation. I'm not going to get too excited about that. There's still a lot to get through. We've got the inflation figure later as well, and the sort of like the constant sort of like battle between raising rates or lowering rates because of what we've seen over the last few days is going to probably continue for a few days and weeks, possibly even months. So yeah, nice little bounce here. Resistance coming in 12,100, and above that really 12,455, which looks like a step too far at the moment. S&Ps has broken down, and it's also broken through that reverse trend line. Now this trend line lower was much better, and we've broken through it, we've retested it, and we've stalled. So has this done a job? Support was also in the form of this double top formation. The 161.8 fib extension level of that was 3,818. We pushed through there yesterday and then bounced higher. So it's a little bit of a doji candle, maybe a bit of indecision, but I'm not sure yet. I still think we've got a lot to play out. Very nervous about the whole episode. Major support below that, 3,766. Feel a bit out of breath, Joe. Feel a bit lightheaded, but you know.
You've been through a decent amount there, so thank you very much. You done there for the indices?
Yeah, pretty much done. The only other one that sort of like looks a bit ropey is the Aussie 200. China doesn't seem to be too bothered. Nikkei, big support in Nikkei below at around about the 27,000 level. That's one to watch as well. So yeah, apart from that, we can dive into gun to head. That maybe put a little bit of a smile on my face for a few seconds.
Should do, yeah. So the gun to the head trades, this is where Steve and I pick ideas live on the video. As if we had a gun to our head, what would we trade right now? We both pick a trade. We both risk 1% of trading capital, of which we started off with £2,000 in our balance at the start of 2023, in the hope that we can make a profit between now and forever, as long as we keep doing these streams. Each idea must have stops and targets, risk reward ratios of 2 to 1 or better. The trades get closed at 9 p.m. UK time, just so we close them off so we can refresh for the next trading day. It also means that we don't have to carry any overnight costs on these trades as well. Of course, if the stops or targets are hit before that, then the trades will be closed. So yesterday we had a couple of ideas. I was trading sterling Oz and was stopped out on that pretty quickly, if we're honest. So not really in much of a sync with any market at the moment, it would seem. So that was my trade yesterday. We're selling into this level here. It does look like it's potentially forming a double top on the hourly.
So that stopped out though, Joe?
Yeah. I've readjusted this. I was actually trading it down here somewhere.
Oh, okay. All right.
I was thinking, oh, maybe I should have done that. But yeah, I was stopped out on that. But Steve traded gold and nailed it, didn't you, Steve?
I certainly did. And that was like 2 on the spin. I was getting all giddy.
Let me just bring that up because you did actually publish it. So
yeah, I did publish it.
On our profile signal_center, Steve looked for further upside in gold, highlighting a bullish flag or pennant formation. And let's just zoom in to have a good look at this, shall we? So it was preemptive because it hadn't broken the pennant or the pattern yet, but Steve went for it anyway, which, this is where you get the better risk reward trades if you do sometimes preempt these moves, but of course they can be riskier. Not in this instance though. Steve nailed a 3.1R return on gold, so well done to you. Pretty much nailed the top there as well. We were having a couple of conversations intraday about that tickling Steve's limit and not quite getting there, but eventually it did, and there was no concern there. So well done, Steve. Nice win.
Took me back to the trading days, mate, where I sort of you're sitting there and it's just it sort of stalled. I think the high at one point was 1312.97. I'm thinking he's like 300ths of a pip away from actually hitting my target. And then it sort of came all the way off to like, 1905 or something. I thought, oh, that's going to be a disaster. We've had one of those already, haven't we, on the gun to head, where it sort of just tickled with my target. And really, we sort of like, we don't, if you're sort of trading actively, you probably, you're sort of like, you'd get actively involved, but the aim of this show is not to actually adjust it at all. And I was swearing a few times at Joe during the day, definitely.
Yes.
But we managed to sort of like hold on, and then it took that high out by 1300ths of a point. So I was happy.
Nailed it, mate. So what are you doing today? Everyone's hanging on your every word now.
Yeah, I know. I sort of like, I'd love to sort of like do another gold trade today, and like potentially we could. Like I'm thinking sort of really from a big picture perspective. Where are we? We've got the sort of like the Fed now raising interest rates really is not in its best interest because it's trying to bail banks out and stand behind banks. So really, a lower interest rate environment would probably suit the Fed. So don't know. Maybe they're going to sort of like print a CPI figure that's like better for them, so it means they don't have to raise rates. Oh no, that sounds like it's manipulated. I shouldn't really say that, I suppose. But anyway, we'll so I'm sort of thinking, has gold done enough? And the price action I'm looking at over the last hour it's given me a little bit of a sense of potentially. I mean, if we look at the daily chart, no, it's got to do a lot more. It doesn't feel like the top. It feels like they should have an extension higher. But we have had a quite a decent level. 1915 is quite a decent level. It's broken through the 1900 psychological. Got to 1915. It's hit a few measured move targets. What we've got on the 4-hour chart, we've sort of like, yeah, stalled out around here. Looking back, there's still sort of like a 1960 resistance level, 1903 support level there, and we're just above it. So maybe that 1903 level of resistance previously, or support previously, now resistance, and it's broken through, might do a job. But if we look at maybe, are we looking at a bit of a reversal formation on the 4-hour candle? You could say that's like a an evening hammer formation. You got the hammer candle there. You got the really decent rally. We have had a decent exponential rally, so maybe there's a little bit of a correction on the cards. That's what I'm thinking, Joe. So can I flip it? Can I roll the dice once more? Now, listen, I wouldn't look for much of a pullback either. And from a risk reward perspective, it could be okay, because if I went here, I only have to have getting short at 1904. Could have the stop quite nicely at like 1914. And maybe even look for what am I looking for? 22. That's too much, maybe half that. I can't even do maths at the moment, Joe. 2.5 to 1. I did it. I managed to do it. Right. What about that? How about that for a day? Is that possibly potential back down to just where we were yesterday? Really, it's not beyond the realms of possibility. Let's say it's quite a tight stop. Not going to lie. So yeah, I'm going to go for that. Let's put this trade on. We're going to sell gold. We think it's done enough on the upside. We're going to risk 1%. Oh, it doesn't really give us a lot, Joe, does it? Having this problem yesterday, Joe. It's sort of like, right, let's put the stop in. If we're getting short at market 1915, that's risking 1770 on a 2 lot. That's not far away from what we normally risk. 1915, 1785, and let's target a move to 1876. How about that? Yeah, I'm going to go with that one, Joe, because it sort of like seems to have worked. 1915, the stop, getting short here, targeting a move to 1870. What did I put in? 1877, say. Oh, it's just below
looks
there.
good.
Yeah.
Okay, thanks, Steve. I've got to be honest, I'm struggling at the minute. I just feel a bit out of sync with markets, and this week just been trying to force a few things through and doesn't really seem to be working for me. In terms of sort of history of gun to the head, my expectations should be pretty low anyway, because win rates on average over nearly 750 trades, it's been about 41.4%. Mine's the blue line here, so it is trending higher, but I just feel like I'm getting chopped about a bit at the minute. Our overall balance, we can see over the long term, we've made some very good gains, but in recent periods, in a bit of a drawdown. My own trades on the gun to the head, I think this month I'm down, what, 3.6R, and I think, Steve, in the same time period, you're up 3.89R. So collectively, we're still making money as a team, but I feel like I need to pull my weight a bit, Steve. So I'm going to try and find something today and try and get back in the swing of things. So I did look at Euro Sterling earlier, and that was kind of the first thought that I had, and the one when I flicked through markets first up that I'd quite liked. This is the daily. We can see that it's finding some support 87, 83, and bounced off of that quite handsomely already today. We can also see a short-term uptrend, so potential for a bit of upside there. I'm also getting a bit of shelter from the CPI number in the US, which I'm also aware of today, which is likely to create a fair amount of volatility. So looking at the intraday chart, we can see here in this short term, we're seeing a nice pullback to a 78.6% fib level. So I'm going to try and buy this today. So I'm going to buy euro sterling. Steve, if you want to get that chart up for me.
Okay.
My stop loss is going to go not just below this low that we posted between 7 and 8 a.m., but also this low over here. You can see it was quite a big spike on the candle. So I just want to put my stop loss a tad below that, which comes in at 87.67. So buying at market, stop 87.67. And my target, I was actually using the volume profile over this period here. So basically starting from this low in February 28th to present day, we can see the volume point of control is that red line there. That's where most trade has happened. So hopefully that'll act as a bit of a magnet for price and draw prices higher. That's at 88.76.
Okay, mate, that's about 2-to-1 risk reward, is it?
Yeah, just there should be a tad over, but if you're including fees and stuff, it might be around that.
Yeah, got that on, mate.
Okay, let's see how that goes. So there's 2 trades today. Steve's selling gold. I'm buying euro sterling. Now let's take a look at the day ahead because we've already gone on for quite a bit longer than usual today. So let's just try and quickly wrap it up. We've got US consumer prices at 12:30 today. Usually these data points come out at 1:30, but the US changed their clocks at the weekend, so they are now it's a change by an hour, so prices are an hour earlier than they're coming out. So it's 12:30 UK time. That will correct itself when we change our clocks in a couple of weeks' time. Tomorrow we've got the UK budget, so plenty of more volatility to potentially come throughout the rest of the week. And then we've got this ECB policy decision, and again, there's been a shift in the expectations there. We were talking about a basis point cut of 25 basis points. There was 100% expectation of a 50 basis point rate hike last week. So there's been change, quite dramatic change, and possibly even more to come. We'll wait and see what happens with this US CPI number a little bit later on. So let's wrap it up there, Steve. Thank you, everybody, for watching and for participating and asking us to look at markets. We really enjoy doing that. And hopefully everything that we say provides you with some useful information. But let's wrap it up there, Steve, and wish everybody a good day.
Cheers all.
Bye-bye.